Hello and welcome to Crypto Weeklies. Today in this video we are going to analyze the overall crypto sentiment right now, also conduct machine learning based price forecast and regression based analysis for some of the major cryptos. So if you like this content, please subscribe to the channel, also give this video a like. So the overall crypto news sentiment analyzer, which scrapes the internet to look for crypto related news and using machine learning, classifies those news into bullish, bearish and neutral. One of the major bearish news over the last 24 hours is Bitcoin ETF seeing major outflows, about 270 millions worth. Then again, one bullish news related to partnerships. Another bearish news again related to crypto, major news that BTC target and crypto major holders are not done selling yet. Then again, Bitcoin related risk related news, as well as housing related crisis, people talking about which altcoins to avoid, and then Solana and its slump related news. The overall sentiment still at around 50. There are some bullish, shorter bullish news. Profitability, Bitcoin profitability again stuck at lows. That means it's kind of bearish again. One another major bearish narrative. Again, HBAR related news. We did cover HBAR over the last week and conduct machine learning based price forecast. For HBAR, now we'll look a little bit towards the peak valley composite risk. This is a one single snapshot of what is happening in crypto, based on ranked between 0 and 1. This is the risk score. Again, this and also color coded between blue and red, blue being the low risk environment, a great time to enter. Again, none of the content is financial advice. And red being the great time to exit or not to enter at that point. For example, in May 2021, risks were substantially at around high at around about 0.75 risk. Again, in October, November 2021, again above 0.8 risk. That's when market gets too overheated. Yellow is neutral, again moderate risk. What I personally do is halt when it's kind of in yellow zone. Orange is being cautious between 0.4 and 0.75 risk. Green is starting to consider. Green is when starting to consider DCAing becomes more and more logical. And blue, definitely the best phases to enter the market historically speaking. You can see again evidenced in January 2021, again late June, July 2022, starting September 2022 till about October 2023. That was the accumulation phase. Right now the risks are at around 0.16. That means they are the color code is green. They are becoming the market is becoming more and more lucrative to enter. Personally speaking, green is when I start considering DCing into some of the major cryptos, and blue is when again that is back the truck kind of zone where everything is on fire sale and have to be cautious about which cryptos will survive and which have the best narratives, and checking with respect to the technicals which ones are undervalued. And for this we have this regression based analysis. First we'll do the simple moving average based analysis for the entire market. This is Bitcoin and ETH, but again they together have about between 60 to 80% of the market dominance. And that's the reason the risk analysis of these two cryptos makes more sense, because most of the cryptos are correlated to either Bitcoin, ETH, or both. So right now their own individual risk journey based on their 20-week moving average coming in at risk between 0.2 and 0.4. BTC risk, ETH risk at around 0.21, BTC risk at 0.23. Again, this gets classified into low risk environment. The lowest risk, again when everything is in fire sale, the best time when everybody is panicking. We witnessed that zone early August, 4th and 5th of August, when BTC risk fell below 0.2 for 3 to 4 days. Again when Bitcoin capitulated to at around, if you go over here on August 2 or between August 4 and August 7, if we look at that time frame, Bitcoin did have a wick at around 50k. at that time, first week of August, one week at around 53-54k. At the current point, the price of BTC is at around 56,000, and if you were to look at decent entry points, whenever this analysis flags the lowest risk, like it did once in the middle of bull market at between May to July of 2021 again, and back again in the middle of bear market of again January 2022 as well as June 2022. That's when considering DCAing makes more sense in tandem with the peak valley analyzer. So again, no single model can claim to be perfect. It's just when most of the models have a confluence either to enter or to exit, that's when it becomes more and more sense to follow the trend. Right now, if we were to focus our attention on Bitcoin and its regression based analysis, we can see this is the fair value is in pink. On top there are 3 standard deviation residuals, on bottom there are 3 standard deviation residuals to the downside. The key idea is with these 3 standard deviation bands, only 1% of the time get market or the price action is outside of these bands. If we reduce this to 2 standard deviation, about 5% time is spent outside of these bands, and if we even lower our threshold to only 1 standard deviation, about 70% the price action is within these bands. And these key levels, if we were to focus at this time, the fair value for Bitcoin per this analysis, if we zoom in, is coming in at around 68k, and the current price is at around 56k. That means prices are lower than the fair value per the polynomial regression based analysis. This is not a historically fitted analysis. This also provides the current valuation of BTC per the regression based approach. If on the key values to look for are, if there is a further downturn, can BTC again hold this 42k level, which would still keep Bitcoin at around between the 1 standard deviation zone, that is closer to the 70% of the time where the price action stays within these bands. Whenever the price action falls below the green line, that's the best time to dollar cost average or to do a lump sum buy of BTC, historically speaking. Again, not financial advice. We are that zone is right now at around 42k, but as you can see, as time proceeds, these lines have a tendency to go up during the bull market and to go down slightly during the bear market. For BTC, this is again, Bitcoin has been being adopted from cycle to cycle, so you would see that these bands essentially go up with time. But if you take a look at for some of the altcoins, let's take ICP as an example. You can see the regression bands have a downward slope during the bearish phases as well as an upward slope when there is some bullish narratives. So per this analysis, Bitcoin definitely undervalued at this point. That means if Bitcoin is staying relatively undervalued, that means most of the altcoins will have a similar story on their own regression journey. But Ether is almost close to this 1 standard deviation low right now. If we take inventory of this, Ether's price action coming at around $2400, and that's $2,388 is where the 1 standard deviation bottom is. Right now Ether is almost only $11 to $12 trading higher than that price. In terms of its own fair value band, or the fair valuation for Ether is at around 3,850. That's where Ether saw some resistance or some support, during its July crash of 2024. But again, after a brief fake out, the trend has gone down. Price action is close to the 1 standard deviation bottom, and if ETH is at this 1 standard deviation lows, some of the other altcoins would likely be at further lower valuation. So Cardano is not a great example. Let's take Chainlink as an example. The price action is definitely well below the two standard deviation bottom. If we get rid of the 3 standard deviation, you can see the price action currently lower than the 2 standard deviation bottom for Link. So again, this is one of the ways to analyze which cryptos are overvalued or undervalued. Today's crypto that we'll be focusing a bit is Litecoin. The reason being, Litecoin is the only crypto over the last 7 days which has had a positive return. The rest of the market is going down, exceptions stable coins, but again, they are not part of the analysis anyway. So Litecoin definitely holding the candle longest. The price action at around over here at around $65. Per this analysis, this is the machine learning based price forecast for Litecoin, has been consistently putting higher lows ever since December 2018. These lows, again, this is the first time the previous lows at around October are getting challenged, and again price action is slightly lower at a weekly average level in August than in October 2023. Let's see if these valuations find a decent support, maybe at around this $48. If that's the case, the base case scenario for Litecoin going forward per the model is between $65 and $70 if there is no bias to bullish or bearish side. If on the other hand, if the downtrend that began in April continues, the lows that is at 1 standard deviation accuracy could be between $34 and $58. This is again, no one can tell you what can happen in the market tomorrow. That is dependent on the market forces, but we can always use machine learning technique to model what are the likely theoretical floors, which is the green line, and theoretical ceilings at which is the yellow line, which at 1 standard deviation accuracy, 2 standard deviation, 3 standard deviation accuracy. For now, we'll focus on 1 standard deviation moves, because again, crypto is not in a mania or ultimate panic stage. If we continuously see that the prices are getting lower than the 1 standard deviation forecast, again the second standard deviation is always there to consider. The 1 standard deviation ceiling for Litecoin though is at between $74 and $128 between now and end of year 2024. So that's a bit about Litecoin. Also on its own regression journey, price action for Litecoin is lower than the fair value for Litecoin is at around $97. The key levels to watch is the $51 territory. If this price action at around between $51 and $52 is held as support, if there is a further correction, that is right now the price is slightly above that at around $65. If this $51 $52, again this is an upward trending support. Whenever these two lines, if they converge, and if Litecoin holds this 1 standard deviation regression trend line as support, then the second valuation would be to check is the fair value at currently at around $97. So that's where Litecoin is currently. For accumulating Litecoin, this is not the worst time. Again, the price action is slightly lower than the time weighted average price. The time weighted average price is around $69. Price is below that. That means if you check on the risk score, this risk is at around this per the TWAP model, the risk is essentially 0. This is a very long term model. It's not suitable for any mean reversion or short term related outlook. And in terms of the moderate or cycle based model, like one cycle based model, this is again based on the proportional difference between the price and the fair value. The risk level are at around 0.04. Again, very low risk at this point in time for Litecoin. And the last but not least is the shortest term risk at this current level is at around 0.23. Again, the third best time to DCA Litecoin per this analysis. Between 0.2 and 0.3 risk. With this, I would like to conclude the video. Hope you liked the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.